Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined today by Takahiro Sekido, Chief Japan Strategist for MUFG. It's Wednesday, September 7th, 2022. Welcome back to the podcast, Sekido-san.
Good to be back.
It's good to have you. And it's been a pretty long break, which covered both the Obon holidays in Japan and the end of summer vacation season here in the States. And I was among those on vacation. Good to be back in the saddle. But during that time, we missed a lot. There were some huge moves in global financial markets, including spot dollar yen. Why don't we start the episode by reviewing price action in Japanese financial markets specifically over the month of August? And why don't you give our listeners a preview as to what's in store for the month of September?
Okay. In August, JGB rates rose, especially the belly, as JGB short positions were covered, and the yen basis were neutral because of the Obon holidays. The dollar yen spot rate topped 140 level and is closing to on a 145 already in September. The 10-year JGB tops the upper 0.25% limit under the BoJ's yield curve control operation late in the month, as daily fixed rate JGB operations were announced. However, JGB selling tested yield curve control was not sizable in contrast to the early summer. Moving forward, we expect trading to pick up, especially on the front end of JGB yield and the yen basis curve, because of, firstly, the Fed accelerating quantitative tightening. Secondly, widening the dollar yen basis nearing the end of the quarter. Thirdly, Japanese investors rebuilding their FDI and G10 bond positions. And fourth, the BoJ's commitment to yield curve control operations. Though we hit it in April to June, the battle over the 10-year JGB yield will not be heated in September, and the BoJ will likely not alter its stance toward JGB yield curve control settings. The dollar yen spot rate is likely to rise further because of not only the strong dollar and the tightening of dollar funding, but also because of underlying demand by Japanese importers. Yen selling flows were very strong among Japanese importers, especially in the resource sector, energy sector. So dollar yen could easily approach the 150 level.
That is crazy, 150 on dollar yen, although I thought probably, 3 months ago, 6 months ago, 140 was crazy, 145 was crazy. So really some epic moves in spot dollar yen. But let's get a little bit more into the weeds here, specifically on the Bank of Japan's JGB buying. You said just now that you didn't think that the fight over over yield curve control, specifically that upper band, would be as heated as it was earlier in the year, and perhaps because the BoJ decidedly won yet again. But you also, in a recent piece, mentioned that the BoJ made some notable changes to, or maybe not notable changes, but made some changes to the buying plans for September, particularly for the cheapest issues or the cheapest to deliver issues. Could you explain the details of this for our listeners?
Okay. In the evening on August 31st, the BoJ released its September JGB buying schedule, as well as, firstly, loosening of requirement for cheapest to deliver JGB lending. Secondly, the upper buying limit per commercial paper and corporate bond issuer. And third, an expansion in corporate bond purchases for October from 75 billion yen to 100 billion yen. The BoJ will make the following changes to the securities lending facility for cheapest to deliver JGB series 357 to 359, effective on September 1st. Firstly, increasing the number of the days for consecutive lending from 50 days to 75 days. And secondly, expanding the issues to which the relaxed terms apply for more than 50% of BoJ's JGB holdings to all cheapest to the labor JGB issues. The measures are intended to ease the excessive tightening in supply and demand for JGBs in Tokyo repo market. This can be considered a reflection of the BoJ's monetary operation stance to limit and control upward stress on JGB rates for JGB futures during overseas market trading hours. Moreover, we think the BoJ's announcement of an upper limit of per-issuer commercial paper and corporate bond purchases, as well as increase in corporate bond purchases from October, are efforts to prevent poor transparency in the dollar and euro credit markets from spreading to yen credit markets, including yen samurai financing, after the US Fed accelerates quantitative tightening.
Yeah, seems reasonable given the direction of travel of the Fed to to put some safety gates around those markets for sure. So switching topics, Sekido-san, you mentioned the Ministry of Finance's assumption of JGB yields in its fiscal year 2023 budget proposal in a recent piece, and noted that you felt that this could perhaps foreshadow changes to the JGB yield curve. I'd like you to take us through the specifics there because I kind of follow, but it would be helpful for me, I suspect our listeners as well, to better understand exactly what you mean.
Okay. On August 30th, the Ministry of Finance sold 26.9 trillion yen in a fiscal year 23 budget proposal for JGB interest payments, an increase of 2.6 trillion yen from fiscal year 22. The Ministry of Finance interest payments are estimated based on a JGB yield assumption rate of 1.3%. The JGB assumption rate for the fiscal year 22 budget was 1.1% and was 1.2% when the budget was drafted. Budget proposals have reflected higher JGB assumption yields since fiscal year 2007. We assume the same JGB yield curve for fiscal, monetary policy, and Japanese pension asset management. So do not plan to change our yen rates outlook and will carefully watch, firstly, the JGB yield assumption level used to calculate JGB interest payments in a fiscal year 23 budget, and secondly, any changes in a BoJ's leadership, especially the relationship between the Ministry of Finance and the BoJ. This suggests that the Ministry of Finance can accept slight JGB yield rise in line with the BoJ's yield curve control operations in fiscal year 23.
Okay, so perhaps a sign that that the BoJ might loosen its grip on the JGB market in fiscal year 2023. So I think suspect that's something for us and our listeners to to watch for over the course of the current and future and next fiscal year. So I think we're about out of time, but I don't want to wrap things up without getting your outlook across markets, specifically yen rate, spot dollar yen, and cross currency basis. So why don't you let us have it?
In August, the hawkish policy stance of the G10 central bankers became apparent after the Jackson Hole meeting. US job data and ISM did not change the Fed hawkish policy stance. Although oil prices have dropped, they are still at a high level, and the situation is conducive to yen selling by Japanese importers. As the end of the quarter approaches, dollar funding needs for early coverage of the year-end will tend to support dollar strength. dollar yen is expected to be neutral to bullish bias, with the trading edging up to 142 to 145. The yen rate swap curve has risen, while the JGB yield curve has steepened with a decline of the front end. We are plunging an auction for 6 months TDBs and a JGB liquidity supply of 5-year to 15.5-year maturities on September 8th. The BoJ's purchases of JGBs, foreign investors' preference for JGBs, and Japanese investors' abundant surplus funds will likely stabilize JGB rates in this G10 yield-raising phase. We maintain our neutral bias for yen rates. Prior to this week, the yen basis curve has tightened at front end and widened from the belly to long end. According to the Ministry of Finance weekly securities data on August 21st to 27th, all securities purchases by Japanese investors resulted in a net sales of 551 billion yen. A breakdown shows that Japanese investors sold a net 303 billion yen of medium to long-term falling bonds and 266 billion yen of short-term falling bonds, but at the same time they purchased a net 18 billion yen of falling stocks and investment fund holdings. Previously, Japanese net acquisition of medium to long-term falling bonds continued for 4 consecutive weeks, but now it has been low for 2 straight weeks. Meanwhile, foreign investors sold a net 3.9 trillion yen of Japanese securities. A breakdown shows that net selling by foreigners across all types of Japanese securities, 3 trillion yen of short-term bonds, 536 billion yen of Japanese stocks and investment funds, and 406 billion yen of medium to long-term yen bonds. Japanese investors have completed a round of foreign bonds disposal, and now their preference for dollar credit risk will probably strengthen. We revise our outlook for yen basis from neutral to widely biased.
Okay, so bullish on dollar yen even at these extreme levels. Neutral on JGBs as the BoJ continues to successfully defend the upper band of its 0% target for 10-year JGB yield. And basis, cross-currency basis rather, bias wider, even after it was really a big move, on Wednesday, both during the Tokyo session and continuing into the, to the London and New York session. So, great stuff as always. Thanks for joining us, Sekido-san.
Thank you for having me, John.
And thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts. And reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.